Well, I think the biggest thing you're seeing, Wolf, is you saw a month where the S&P 500 up over 5%. Yet at the same time, our clients' exposure to the market was relatively unchanged. I think the biggest overall pattern we saw was that in the past, when clients would sell stocks, they'd immediately reinvest it in other stocks. What we started to see last month was clients sell stocks, some of it going back into equities, as they were net buyers of equities, but they're also net buyers of fixed income. I think this tug of war that we're seeing right now between value stocks, growth stocks, is kind of weighing on the retail investor, as we're seeing it weigh on the market a bit overall. You know, today being obviously the perfect example between tech selling off and things like consumer staples and financials doing so well. People just are a little bit confused, I'll say, as to where to go next. And I think as we start to see more businesses open, more people get back to work, hopefully we'll get a few more answers for people.
What have people been buying most of all in the last month? Is it typical cyclical stocks like energy and banks, or is it actually a little bit more complicated than that?
No, it's a little bit broader than that. You know, we saw last month where people buying Disney, Viacom. You know, Apple was actually fairly well bought last month. And, you know, I look at days like today in the last few years where Facebook and Tesla selling off, I would expect them to be bought. Tesla was one of the stocks that our clients bought last month as it sold off a little bit. So it's also interesting for me to see our millennial clients driving some of the activity that we saw last month. Stocks like Palantir and Skills, which isn't, you know, normally one you're necessarily talking about, the game platform. So the buy what you know is also showing up in some of our millennium clients. So you're seeing a broader spectrum of stocks that people are buying overall. And as I say, Disney and Viacom, I guess you could say maybe those are as much streaming stocks as anything else, particularly with Disney.
We played a soundbite from Kathy Wood. Obviously, the ARC phenomenon has attracted a lot of retail traders and followers to her strategies. It's getting whacked, as Wilfred said today. Some of these biotech names that she's in down double digits. How much broad retail pain is there on days like this, which have been going on now for weeks?
Well, you know what, Sarah? What's really been amazing is, and we've seen it over the last couple of years, and you and I have talked about this in the past, I don't think retail sees these days necessarily as pain, because the buy the dip mentality, particularly on those stocks that have been very popular over the last few years, is something that tends to maintain itself overall. So I think that many people view days like today actually as opportunity longer term. Now, at some point, will that end? Absolutely. But it has worked very, very well. And it's just like, you know, in football or something, if the play keeps working, you keep running it. The people who have continued to run this have been handsomely rewarded. And again, I also think there's been some hesitation as we're near market tops on, you know, S&P and Russell. Yes, the NASDAQ's about 3% off its high, for people to go as all in perhaps as they did when we were at a little bit lower levels.
JJ, what about overall volumes that you're seeing and engagement with retail investors? Have you seen that start to tail off a little bit since things have started to reopen elsewhere?
Oh, yeah. You know, we're not seeing the same volumes that we saw in the GameStop days, et cetera. We're still seeing, I think, what will be more of a new normal, where you're seeing more elevated than we saw in 2000, you know, this time in 2020. But I don't know that we're going to see as consistent a basis the types of volumes that we saw in January and February. I think there's a couple of reasons for that. Number one, people getting back to work. Number two, people getting the freedom to go outdoors, want to take vacation, or, you know, for the first time in over a year, many people got to see their mother on Mother's Day. That's absolutely great. So people taking advantage of things like that overall. And then there's no great story right now. We're in the middle of this tug of war, as we talked about, between value and growth. We're in a time where the Fed is going to sort of keep the money rolling. Maybe many thought the employment report would change that narrative last week, Friday, but it didn't. So we're pushing that out at least a month, I think, to where we start talking about more inflationary pressures overall. So it really is a time where you're looking for a catalyst. We don't necessarily have that catalyst. One of the interesting things that our clients did last month, you know, the catalyst was COVID vaccines. We saw Pfizer, we saw Moderna hit 3-month highs. Our clients were sellers of both and of Johnson & Johnson. So again, all these stories that are playing out, people are looking for what's the next story. And besides the back to work, it's a little bit difficult to say what that story is right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.